Okay, let's dive into this. Welcome to The Explainer. Today, we're talking about something literally everyone loves, right? Getting money back. If you live in Michigan and you pay property taxes, or even if you just pay rent, you might be sitting on a hidden pile of cash without even realizing it. We're going to decode the Michigan Homestead Property Tax Credit. It's this fantastic program designed to keep more of your hard-earned money right where it belongs, in your own pocket.
Seriously, are you leaving money behind? Because eligible Michigan renters and homeowners could be missing out on a massive tax relief check. We're talking about a maximum credit up to $1,900 for the 2025 tax year. And look, if you're kind of a beginner when it comes to taxes, please don't panic. The financial benefits here are huge, and the process of claiming it is surprisingly simple once you know the exact steps.
So what exactly is this credit? Well, at its core, the Michigan Homestead Property Tax Credit is what tax pros like to call a circuit breaker program. It's basically designed to step in and provide relief when your property taxes get way too high relative to your income. And here is the absolute best part. You don't need an advanced math degree or to spend hours crying over a calculator to figure out exactly what you're owed. Once you understand the basics and submit the right form, the state is going to do the complex math for you. Now, what's really interesting about this slide is our structured game plan for today. We'll be covering 1. The Michigan Property Tax Credit, 2. Who qualifies for the credit, 3. The step-by-step claiming process, 4. Real-world scenarios and examples, and finally, 5. Frequently asked questions.
All right, Section 1, the Michigan Property Tax Credit, demystifying the bureaucratic jargon. Let's cut through that jargon right off the bat. We need to start with the most important word in the entire program, homestead. As the state guidelines explain, your homestead isn't, a farm with a barn and a tractor. It's simply the place where you live. It's your primary domicile, the place you always intend to return to. Now, a homestead doesn't just mean a traditional house. It could be a rented apartment or even a mobile home sitting on a lot. But it absolutely cannot be a college dorm, a second summer cottage, or a property you own and rent out to someone else. You can only have one true homestead at a time.
Moving on to Section 2, who qualifies for the credit? Breaking down eligibility rules for everyone. You might be surprised by how broad the qualifications actually are. To be eligible, you must have been a Michigan resident for at least 6 months of the year you're claiming. You have to own your home or have a contract to pay rent, and you must actually occupy that specific Michigan homestead. Plus, your total household resources need to fall under a specific annual limit. For the 2025 tax year, that upper limit is $71,500. Keep in mind, these caps are indexed to inflation, meaning they adjust annually to keep up with the cost of living. Oh, and one quick note, if 100% of your income comes from the Michigan Department of Health and Human Services, unfortunately, you don't qualify. Now, how this credit works really depends on whether you own or rent. It's kind of a fork in the road. For homeowners, there's a specific asset test. Your home's taxable value, not the assessed value, not the state equalized value, but the taxable value found right on your property tax statement must be $165,400 or less for 2025. If it's higher, you don't qualify. But for renters, because you don't technically own the property, that taxable value cap completely disappears. Instead, the state calculates your property tax equivalent by taking exactly 23% of your total annual rent. Okay, we also need to define total household resources, or THR. This is a very common tripping point for beginners and a major gotcha to watch out for. THR is much broader than your standard taxable income. It starts with your adjusted gross income, but then you've got to add back in things that are normally tax-exempt. We're talking about Social Security benefits, child support payments, workers' comp, and even capital gains from selling a house. You really need to add this up carefully before you just assume you're safely under that $71,500 limit.
Let's hit Section 3, the step-by-step claiming process. This is your actionable guide to actually getting that relief.
And this brilliantly illustrates the paperwork side of things. Time to brave the dry tax documents. You're generally going to encounter two main forms, the MI-1040CR and the MI-1040CR2. Now, the vast majority of people will just use the standard MI-1040CR, but if you're a blind homeowner, an active military member, an eligible veteran, or a surviving spouse of a veteran, you'll want to look really closely at the MI-1040CR2. The state actually recommends you fill out both if you qualify for the CR2, and then simply submit whichever form gives you the bigger credit. So, here is your completely manageable 4-step game plan. Step 1, gather your documents. Find those end-of-year property tax statements from your local city or township, or grab your signed lease agreement showing the total rent you paid.
Step 2, accurately calculate your total household resources. Step 3, pick your form, which, as we just discussed, is usually the standard MI 1040 CR. And Step 4, file this form right alongside your Michigan income tax return. It's truly an empowering process when you just take it one simple step at a time. I cannot stress this enough. The state highly encourages e-filing. Using reputable tax software to e-file is absolutely the best way to handle this. It prevents those simple mathematical errors, it stops you from making accidental transcription mistakes, and, most importantly, it significantly speeds up how fast the Treasury processes your claim and sends you your money.
Section 4. Real-world scenarios and examples. Let's see the credit in action.
Let's take all these rules and see how they actually behave in the real world. $1,900 is the absolute maximum cap for the 2025 tax year, but it's vital to understand the phase-out mechanism here. Let's say your total household resources hit $62,500. Above that specific mark, your credit begins to gradually drop by 10% for every $1,000 you earn. By the time your resources hit that $71,500 ceiling, the credit phases out entirely to zero. Let's move to and see how this builds for disabled veterans who use the CR2 form. The math looks a bit different here. Instead of just a standard calculation, veterans get a specific taxable value allowance based on their disability percentage incurred in the line of duty. A 10 to 50% disability grants a $3,500 allowance. A 60 to 80% disability raises it to $4,000, and a 90 to 100% disability gives a massive $4,500 allowance. It scales beautifully to provide targeted relief to those who served. Okay, watch out! Here is a massive real-world pitfall to carefully avoid. While blind homeowners use the CR2 form to get a better allowance, blind individuals who rent their homes are strictly prohibited from using the CR2. If you're a blind renter, you must claim your credit as a totally and permanently disabled person using the standard MI 1040 CR form. Filing the wrong form is literally just going to delay your much-needed refund, so definitely keep that rule in mind.
Finally, Section 5. Frequently asked questions. Let's resolve those lingering doubts.
We've compiled the most pressing concerns taxpayers have to help you avoid any last-minute panic. A really common question is, what if I don't file a Michigan income tax return at all? For example, maybe your only income is Social Security, so you don't usually owe state taxes. Well, fantastic news, you can still file the MI 104CR form all by itself, just to claim this property tax credit. You do not need to have a standard tax liability to get this money back.
Another big one we hear. What is the absolute final deadline to claim this credit? Naturally, you should aim to file this with your standard tax return in mid-April. But if you discover you completely missed it last year, do not panic. The state of Michigan actually gives you a massive grace period. You have up to 4 years from the original due date to file a new claim or amend an old one. That's 4 entire years to go back and get the money you are rightfully owed.
And what if you're a senior citizen, a disabled person, or a veteran struggling to pay your summer tax bill while waiting for this credit to arrive? Yes, you can defer your summer taxes. You just need to file Form 471 with your local city or county treasurer before that summer bill's due date. This offers wonderful peace of mind and gives you the breathing room you need while the state processes your refund.
So the crucial point is remembering these 5 key takeaways. 1. Verify you lived in your Michigan home for at least 6 months. 2. Calculate your total household resources carefully, remembering to include things like Social Security. 3. If you own, make sure you look at your taxable value, not assessed value. 4. Pick the right form, either the CR or CR2, depending on your veteran or disability status. And lastly, e-file to get your money as fast as possible.
Before we wrap up, please note our official disclaimer. This explainer is strictly for educational purposes to help you understand the source material. Tax laws and inflation adjustments, like that $71,500 income limit we talked about, change every single year. Always consult a certified tax professional or reference the official Michigan Department of Treasury website for the most up-to-date, personalized advice.
Which brings us to our final question for you. Are you ready to conquer the paperwork and claim your rightful Michigan property tax relief? The money is sitting right there, authorized by the state, just waiting for you to prove your eligibility. Gather those property tax statements, pull up your rent receipts, and take charge of your finances today. Thanks so much for joining me on this explainer, and happy filing.